For many Americans, these small banks are the only financial institutions in their entire community. By liberating small banks from excessive bureaucracy, and that's what it was, bureaucracy, we are unleashing the economic potential of our people.
And as he put pen to paper, small and community banks celebrated. A huge regulatory weight has just been lifted off the smaller regional banks. The financial crisis era regulation known as Dodd-Frank has just been trimmed, liberating these regional banks and simplifying capital requirements for banks that have less than $250 billion in assets. And as we look and see the ETF that represents a lot of regional banks, this is the SPDR Regional Banking KRE ETF. It is up 9% year to date, up 21% year over year. They were anticipating this one. Let's bring in two regional bank leaders, Rebeca Romero, Rainey, CEO and president of the Independent Community Bankers of America, which represents 5,700 community banks, and Scott Shay, co-founder and chairman of Signature Bank. Scott, you were very involved in the creation of this bill with both the House and the Senate. 33 Democrats, along with a bunch of Republicans, voted for it. You got to be thrilled. What does this mean to all regional banks?
Well, I am thrilled. I think this is a great day for American workers who are financed through mid-sized banks. And I think it's I think it liberates essentially banks to continue to grow and compete with the larger banks. For example, we're a $44 billion bank. As we approach $50 billion, we would be seeing tens of millions of dollars of more regulatory costs. And now we can continue to grow right through that level, as can so many of our brethren banks. And that's good for consumers because we're going to be financing companies, and it's good for the economy. I think this is a tremendously good day.
Rebeca, they say the road to hell is paved with good intentions. I think Dodd-Frank had good intentions to prevent a future financial crisis, but in being so onerous on the bigger banks, which took, in many cases, crazy bets, they swept in the smaller regionals who were actually quite focused on making sure they were lending properly to their neighborhood community. So what does this mean for small business owners who are watching right now, or anybody who wants a loan in their local neighborhood?
It means that community banks across this nation are going to be able to respond to those needs of the small businesses making home loans, making consumer loans, to really unleash their full potential and harness the power of local communities.
Dodd-Frank was signed July, I believe, of 2010, correct? I looked because I wanted to see how many regional banks failed from July after it was signed to just December of 2010. Turned out more than 50 had gone under. 50 regional banks. Scott, you remember those days. Even a year before, the famous one was July 9th, where 7 regional banks on a Friday collapsed, went under. People are worried, and in fact, Trish had a guest on who said, this is terrible. We're worried that this is actually only good for the big banks and not the small banks. What do you say to that?
You know, I'm really puzzled when people say that. I mean, frankly, by allowing us to compete, we're going to be able to do more for the American consumer. 45% of all checking accounts in the United States were opened by just 3 banks in the last few years. And if you're talking about the banks that failed, those 50 banks, I think when you're referring to really, for better or for worse, smaller banks,
yes,
whose other underlying problems may have been exasperated by the financial crisis, which was frankly a complex matter done by banks trading in pretty complex securities. In our case, we're basically a community bank that got bigger because we're in the New York area. And we never had a down year during the financial crisis. We made more money in 09 than 08 and didn't have a down year.
I just want to let you know, we're looking at a 10-year, taking us back to, of course, 2008, during the height of the financial crisis, of this regional bank ETF. Boy, it sure looks like a buy at the worst point because we've continued to climb. But Rebeca, give us a sense now for the consumer out there, because part of what was added into this plan was freezing of credit if your credit had been hacked. Of course, we all remember the Equifax hack, which was just disastrous for the consumer because their credit rating was tampered and was tainted. What will this mean to people who need a mortgage, who need a business loan? And we know what banks do. They check your credit.
Right. So it gives consumers the ability to freeze their credit if they so desire. But really, for consumers to be able to work with their local community banks, whether it's through a mortgage loan, it's a consumer credit that they're looking for, it provides an infrastructure and frees up the capital of these community institutions to get back to lending and taking care of their communities.
Well, I am sure it's a wonderful day, Scott. If you had the 33 Democrats' ears at the moment, and I say that because they joined with the Republicans. This truly was bipartisan. The president looked very happy to be able to say that. What would you say to them?
Well, first of all, I'd say thank you. I mean, this was really driven by the moderate Democrats in the Senate. I mean, I really have to say thank you and toast to Senator Heitkamp, Senator Donnelly, Senator Tester, Senator Warner, who really took substantial leadership in creating a bill that everybody could get behind. And there were a number of really mainstream moderate Democrats who recognized that this was a bill that was good for their communities. So I thank them.
Rebeca, Scott, onward, right? I'm sure there's more work to do, but for now it's a start. Great to see you both. Thank you so much.